Hey everyone, Canoo is the latest EV company that's starting to ramp production and make sales. Up until this point, it had just been in research and development phase, but now they've come on the market and they're starting to make sales, which started asking the question, is Canoo stock a buy for 2024? Now, you might be saying, well, of course it's a buy. And the reason why you might be thinking that is the stock price is down 99% off its high. 99%. It has lost 99% of its value. And so you might be looking at it and saying, well, it's a bargain at this much of a discount. I wouldn't be so sure. So let's take a closer look into its details and let's dig deeper and try and answer this question if Canoo stock is finally a buy for 2024.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
I mentioned already that Canoo is finally in the revenue stage. The management saying that they're accelerating the revenue generation phase, and this was on November 14th. They're going to deliver the first units to the state of Oklahoma as part of the up to 1,000 unit agreement. Now, this agreement, I want you to pay attention to the up to 1,000 unit part, right? That's really where these agreements come to focus is they announce this big number, but then when it comes time to it, you realize that the number of units delivered is actually a lot smaller than initially announced. Usually companies like Canoo, when they enter into these type of agreements, they'll tell their counterparty, like, look, if you allow us to make this announcement of a bigger number, we'll put in the up to number there so you don't have to purchase the 1,000 units, but just agree to it so that we can make this announcement that will get investors excited and get money into the company. And that's where I've seen a lot of these EV companies make these big announcements, but then when it comes time to make the deliveries and get the money, that money is not there, those orders are not there, and the company ends up coming back to investors and saying, yeah, I know we told you it was going to be this great thing, but it wasn't actually that. And that's why you're seeing a lot of these EV stocks are down so much from their peak valuations, because it's come time for them to deliver on their promises, to deliver on those rosy projections that they were making in 2020 and 2021 when investor optimism was at its peak and they took billions of dollars from investors. And now that it's come time to show their hand, it's not as strong as they were projecting. And so a lot of these stocks are getting repriced downward down to reality. Unfortunately, that has cost investors a lot of money. But I would argue, and I have been arguing since 2020 and 2021, that these EV investments are extremely risky and overpriced, and investors should avoid them if they can. And so far, you would have saved a lot of money if you had avoided many of these EV stocks. Some of them have done well, but most of them not so much. So let's continue looking at Canoo. So one thing I want to highlight is that the company made a deal to get $45 million in a preferred stock and warrant subscription that put them out of this dangerous position. They had only $8 million left after they raised over $1 billion from investors. They have only $8 million left. And so they raised another $45 million. That would have put their cash balance up to $53 million as of September 30th. That was desperately needed because, as I will show you, they were running out of money and they haven't yet started making sales in a meaningful amount. So they need this to bridge the gap. I mentioned that Canoo stock has been down significantly off its high from 2021, 98.63% down, 98.63% down off its high. In the most recent quarter, the company burned through $61.89 million, but they have improved these losses. They were losing $120 million per quarter at the worst point, but now it's down to 61 million, and that's good news, especially because it's almost time to ramp up sales, and that should help the company reduce these cash outflows. In fact, let's look at the estimates for Canoo over the next couple of years. And here is where you can understand the enthusiasm for Canoo stock. The forecast suggests that its revenue is going to be almost nothing in 2023, just 1.4 million, but it's expected to explode to 268 million in 2024. And that figure is expected to increase by nearly 5x again in 2025 to reach 1.25 billion in revenue. So from almost nothing in 2023, the estimates suggest that they will jump to 268 million and then to 1.25 billion in 2025. And if they do hit these targets, then that can justify investors taking a closer look at Canoo stock, because that's phenomenal growth. The difficulty is the risks in achieving these targets. We've seen already many of these EV companies that are just coming to market having difficulty ramping up production, making deliveries, the logistics, all of those operational difficulties that come along with starting a brand new, vehicle manufacturing company, especially one that has brand new technology, right? Electric vehicle technology is brand new, innovative technology. Still, even with those big gains, analysts expect Canoo to lose 41 cents loss per share in 2024, and that will improve to a 20-cent loss per share in fiscal 2025. The good news is that in fiscal year 2025, the analysts expect Canoo to generate a 4.4% gross profit margin, which will hardly be anything, but it will be another big step in the right direction for Canoo's long path towards profitability. It's just getting started, right? It's very, very new. And so you have to be patient with this type of company before it can ramp up revenue, deliveries, sales, get everything under control to where it can start thinking about profitability on the bottom line. We're nowhere near that with Canoo, nowhere near that for 2024. Don't expect any profits in 2024. 2025, you can expect a gross profit, which is the easiest profitability metric to hit between the three major ones, and those are gross profit, operating profit, and net profit. The gross profit is the easiest, and then comes the operating profit, and finally the net profit. So with a gross profit margin of 4.4%, it's nowhere near enough to generate a net profit. So a long ways to go from there even still. But it's good to see the estimates suggest that Canoo is going to explode on the scene in terms of revenue growth in 2024 and then grow further again in 2025. So the company I mentioned already, the 8.26 million, that did not include the preferred warrant and stock sale I mentioned earlier. They have closer to 56 million in cash and 82 million in long-term debt. The company's balance sheet is in a dangerous position. It's in a dangerous position because it's burning through, we saw earlier, it's burning through 61.89 million every quarter, and it only has roughly 50 million. So it has about 1/4 of cash remaining. So this quarter is vital for Canoo, because if it hits these milestones and increases projections and increases deliveries, it will make it easier for Canoo to raise money when it goes back to investors and asks for more money. Speaking of which, let's look at average diluted shares outstanding. The number of shares outstanding is an important financial metric. If a company issues more stock because it is running out of money or it wants to invest in a new growth project, it has the potential to decrease your earnings per share. Look up here, when I have a net income of 1,000 and shares outstanding of 100, my earnings per share is 10. You take the net income divided by shares outstanding and you get 10. But now let's say you increase your shares outstanding to 200 and you have the same net income of 1,000. Now your earnings per share is just 5. The same is true in the opposite direction. If a company is losing money on the bottom line and it issues more shares, it spreads out the losses across more shares, thereby reducing the loss per share, which is a tricky way to reduce the loss per share. Look at this point here. A net loss of 1,000 with 100 shares outstanding creates a loss per share of 10. But if you take that same net loss of 1,000 and you spread it across more shares, 200 shares, you now have a net loss per share of just 5. So it's a tricky accounting trick to get your losses reduced on earnings per share. So you want to take a closer look to see where the improvement in the loss per share is coming from. With that being said, you can see significant shareholder dilution from Canoo, going from about 150 million shares outstanding all the way up to 621 million in shares outstanding. So the company has issued a whopping amount of stock to finance this build out of the company. Finally, let's look at valuation, and the stock is not trading expensively at a forward price to sales of 0.576. And you can understand why it's not expensive, right? We showed you how in a dangerous position it is in terms of cash, how much money it's losing on the bottom line, and how far away it is from profitability, even if it reaches the $1 billion in revenue, which is a difficult thing to do. Even if it hits $1 billion in revenue, it's still going to lose millions of dollars on the bottom line. It's only going to generate a 4% gross profit margin according to estimates, even at $1 billion in revenue. So right now it's not even at 5 million, and it's going to grow to 1 billion and still not be profitable. So it's extremely risky and speculative. And for that reason, even at this relatively cheap valuation, I'm not recommending Canoo stock as a buy. However, if the company makes excellent progress in 2024, I can see myself changing this recommendation towards the end of the year. I don't see this company doing anything in the first part of 2023 that would cause me to change the recommendation. But if it hits milestones throughout 2024 and closes out 2024 on a positive note, going into 2025 with those projections, then I can see myself considering upgrading Canoo stock then. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.